seen since 2008. Blue chips now pushing the 13,000 mark. Allison Kosik joins me now to put this in perspective. Allison, where are we now in terms of a recovery for the Dow?
All right, as far as the Dow goes, John, when you see where the Dow's been and where it is now, it's really made up quite a lot of ground. And, this didn't happen overnight. It's actually been one of those real slow, steady climbs over the past several months. That's despite the uncertainty that's been coming from the European debt crisis. And what you see happening are markets actually reacting to all those economic reports that have come out lately, showing that the recovery is actually picking up speed. The economy is showing that it's adding jobs. The housing numbers, they're improving. GDP, it's weak. But it is growing. Now, we do watch the Dow because it's really meant to be representative of the economy. It's made up of leading banks, tech companies, retailers, insurance companies. And what's in the Dow are these real specially chosen companies that are expected to be around a while. But the Dow really only includes 30 stocks. And Wall Street pros, they say other indexes like the S&P 500 are really a better reflection of how the broader market is doing. John?
And yet we're having this conversation early in an election year. People will look at any economic indicator, the unemployment rate for one. How significant would it be, maybe psychologically, maybe beyond that, for the Dow to get to 13,000?
And you said it, 13,000 on the Dow is really an important psychological milestone. It's a lovely, nice, round number. And you know what? It certainly couldn't hurt President Obama's chances for re-election if the Dow gets there, stays there, and goes even higher. But that is a big if. However, it is getting quite close. The Dow right now sits about 50 points away from 13,000. And you know what? While that sounds great, it's actually not near its peak levels that it was at before the recession. If you look at how the past 5 years have been, it's really been a wild ride. Take a look. The Dow actually hit a record 14,000 in 2007. Then it bottomed out at 2009 at 6,000, and that was a drop of more than 50%. So since then, the Dow has really, really clawed its way back. But you know what? For investors, it's all about gaining back what was lost. People just want to break even, maybe even make a profit. And to get there, to at least break even, the Dow still needs to gain another 9% to reach its all-time high. The S&P 500 has to make up even bigger ground. It has to go up another 13%. And that's what most of our mutual funds, our retirement funds, our 401ks track. So that's the real index that we really want to look at. But you can't deny that 13,000 is a lovely number to look at.